Hello traders, Gary Wagner for Trending Markets, about 10:30 in Honolulu, 4:30 in New York on Monday. It is 19th day of October 2015. We do have the equities markets in the United States trading higher this morning, nominally higher, but you do have the Dow Jones Industrial solidly above 17,000, up about 15 points, 17,230 and change on the day. When we take a look at a basic daily chart, this of course in candlestick format, you can see we did make a low at around 17,130. We did close near the highs, and it was a very, very slight uptick day. Of course, when we take that over to the Standard & Poor's, you get roughly the same thing, trading up roughly a point on the day, in essence unchanged. Now, one of the things that we noticed, we did pull profits last week, and we pulled profits on our E-mini trade. As this market came up, of course, we played it to the upside, and we got in at roughly 68, if I'm correct. So roughly in this area right here. As the market came up and tested just above 2,000, we trailed our stop up just under 2,000 on here. So this little dip is what did get us out. Now, in terms of a technical level of support, it absolutely found some really solid support. Daily chart at a 50-day moving average. Red is a 50-day here, and the blue is a 200-day moving average. My sense is right now that we have actually found solid support in this area, we're headed back up to test once again this 200-day moving average, which sits at around 2055. Of course, record tops in this market at around 2125 on the E-mini. Our next real step is going to be, I believe, to position ourselves from the long side. We want to make sure that we find good support. We should have support here above 2,000 at this point, roughly at 2015, somewhere in that area. But let's see how it trades. Very, very light day in terms of price movement. Now, the dollar itself, US dollar, was stronger today in terms up about 0.5%, but just flirting with 95 on the dollar index. And 94 is really where we pegged really strong support in the market. You can see these bottoms right here on our daily chart. You can see them in a couple of different places, but most recently here, and then again here, this being a piercing line. And these last two trading days, meaning Friday and today, really are confirmation of that. Now, the interesting thing with the daily chart and the dollar index is the fact that we did get across of the longer term and shorter term moving averages. Let's go ahead and pull this chart up. Now, this is a daily chart. We've got a 200-day, a 50-day simple moving average in here. Let's go ahead. And it's basically a dead man's cross or a death cross when you get these two like this. However, the recent activity is really showing us that there is some upside potential. So what we could witness, of course, this is our longer term. If our shorter term is going to move down like this, to look for some point for it to cross above this, and that would really negate really the danger on a technical basis that we're seeing on this cross. But it is certainly something we absolutely want to be aware of and use it to our benefit, so to speak. Now, the other market that we're really looking at is crude oil, and crude was down substantially today, down about 2.5% on the day, over $1.17 per barrel, flirting again with 46. If we take a look at the activity first through a weekly chart, so a much longer term chart, we can see that as this market really traded up and actively from these lows here at 38, it then stalled for a little while. I thought we'd get a much nicer breakout to the upside. We got a small break, but that was followed last week by a rather stiff move below 48. And as I've been talking about, 48 on the resistance side, support roughly at around 43, but we were trading within this band for quite a period of time, very similar to when it was very top heavy at 60. We had this protracted point of consolidation in the market. So now we're going back into this territory right in here, and the question is, will we consolidate or will we break and make new lows? We'll have to see. My sense is that until we get a solid break, because we didn't really we got a solid break, but not a extended break above 48 or below 44. We are still in essence range bound on that market. Our next play most definitely will be in the Standard & Poor's 500, the E-mini. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.